All right, the midterm elections are right here. Probably big implications for financial markets. I got JJ Kinahan, Chief Market Strategist of TD Ameritrade. How's it going?
Hey, Jake. Good to be here.
So my first question, one of the most likely scenarios that the Democrats split, Democrats win the House and the Republicans win the Senate. In that case, with a Republican president, in that case, you usually have market gains for the next year. Do you see that happening?
Well, there's a lot that depends outside the elections tomorrow. There's a lot that's going to go on. The biggest thing will probably be at the end of this month when the president goes to the G20 and we see what happens with the Chinese situation with tariffs. Mm-hmm. But as far as you said, historically, when you have a split House from the president, one party on each side, that tends to be good for the markets overall.
And if that comes to fruition, if the market does pretty well for the year, after this kind of scenario, if it does play out, what kinds of sectors would you suggest an investor looks towards?
Well, I think the biggest sector you have to there's two sectors you have to pay attention to right now. Number one, technology. Let's face it, a lot of the volatility that's been caused over the last few weeks has been because of the tech sector. And again, tariffs may have a factor there. The other one, of course, financials. If we are in a higher rate environment, the financials have not been able to get going in this anticipated higher rate environment, but people have been burned so many times over the last year and a half saying, okay, this is the time the financials get steam, and they haven't. So those are the two that I think are the primaries for us to continue higher.
Gotcha. And two other sectors that have been mentioned a little bit, defense and infrastructure, because both parties seem to agree on spending on both defense and infrastructure. So in the last 5 days, the SPDr defense ETF and the SPDr infrastructure ETF have mirrored the S&P 500's slight rebound. So does that indicate to you that maybe share prices in those sectors are kind of good to buy right now?
Well, a lot of it, particularly defense, is going to depend on what happens in the midterm elections, and we'll see where people agree to there. Infrastructure, I would say, is certainly one that's very interesting because a lot of what we thought might happen from the tax cuts, a lot of that money still hasn't been spent. But with that, I think there was this feeling that there might be more spending on infrastructure. Again, some of the other macroeconomic factors have made companies a little bit more conservative on their spending, but I do think there is a pent-up demand, if you will, to spend money on infrastructure.
Mm-hmm. And in the scenario that, we're going to go scenario by scenario, so in the scenario that the Republicans sweep both the House and the Senate, maybe there's 10% lower taxes on middle-class people, maybe a capital gains tax indexed to inflation, which would be good, so that, it's not as burdensome. Before I ask anything specifically, what happens in the market in that way?
I think traditionally a sweep, be it Democrat or Republican, has not been necessarily a good thing for the markets. And so, the best case scenario, as we started this segment with, was a split House from the president. Mm-hmm. So I think that if you get a sweep, as I said, it's often not good longer term or in the shorter term even for the market. Yeah, there could be some temporary tax benefits, et cetera, but we will see what ends up happening on that. As you said, the primary thought, again, in polling, and as we've seen over the last 10 years, polling certainly isn't always accurate, is that it is going to be a split House. And as I said, a clean sweep is the Republican clean sweep next highest probability, Democratic clean sweep the lowest probability, but clean sweeps again usually aren't the best for the market.
Republican clean sweep, why is that not so great for stocks?
I'm just thinking about traditionally how things have gone, and also we're in a little bit of a it's been a tempestuous, I guess, environment overall. You would think that would be good for stocks, but I can only go by what I see from history, and from history that has not been the best case scenario.
Mm-hmm. All right, Democrat sweep. They would want to bring the corporate tax code from 25% to 21%. There might be an increased tax rate on individuals. Before anything specific, thoughts?
Well, as I said, I think that a clean sweep, the Democratic House and a Republican president in this scenario would probably be a little bit of an antagonistic relationship. We've seen evidence of that again in the past where this has happened, but with the way certain things have been said, one party to the other, I think would probably be a bad thing because it would be too antagonistic.
So if that does happen and the Democrats sweep and immediately you see stocks come down, My guess, correct me if I'm wrong, you want to sell pretty quickly before things drop. I mean, how do you time that?
I think that's going to mostly depend on your scenario. Some will say if we sell off, it's a great case to buy things for a longer term. So, to make a broad sweeping statement like that is not one I would ever do.
Gotcha. All right. And then in terms of financial regulation, I mean, that's the sector that I, was looking at, if obviously the Democrats would want to impose a little bit more financial regulation. Is there some fear in financials if the Democrats sweep?
Again, it depends on what you're talking about. The SEC, I think, has done a good job of balancing regulation with entrepreneurship, and hopefully that's what will continue no matter who's in the White House.
All right. Thanks, JJ.
All right. Thank you, Jake.